Hi everybody, I'm Mariano Conti. I'm going to be taking over MC duties from Kent Barton, who I thank very much for everything he did today. And yeah, I have my mate here, and I want to thank ETHDenver for hosting another great conference. Sad that we can't all be there in person, but as always, it is great to be with everybody and talk about the things we enjoy the most. So without further ado, the next presentation is called DeFi Finance New Frontier. And let's see, we've got some great speakers. Anatoly Yakovenko from Solana, Sam Bankman-Fried from FTX, Cronje from Yearn, and Kristen Stone from Balancers. So I see Anatoly's here. Welcome.
Hey, awesome to be here.
Great, and I see Kristen. Hi, Kristen. Thank you for being here.
I believe Andre's in by voice only, but I'm not 100%.
I'm
pretty sure he is.
He's a ghost in the machine.
Andre, are you around?
Yeah, I'm around. You hear me?
Yes, we can.
I was when you were having technical problems, I actually read a joke the other day that was like early 1900 seances, you know, when people gather together to try and summon ghosts. It's very the same as how these conferences start, because it's always with like, hello, can you hear me? Are you out there? Can you feel me? All of that kind of stuff. So it's a very interesting fact that 100 years later and we're still starting stuff the same way.
Yeah, that's what the last year has given us. And we still need SBF. Okay, so I guess that means to have Sam on stage, I need to stop my video and let the four of you hash it out and talk about DeFi, Finance's New Frontier.
Yeah. Anatoly, you with us? There we go.
Hey, Sam.
Hey, how's it going, guys?
Cool.
So yeah, I mean, I've I don't know, Toly and I've spent a ton of time talking about plans and I guess from my biggest question for you, I think, is maybe thinking about Solana and particularly about future scaling, what the biggest things are that could sort of further increase capacity and where those are. And maybe we'll start that. So I have questions for Andre as well. But
yeah, so for us, this is like a fun engineering problem now. And so we have our runtime, which is Berkeley packet filter. We can take that BPF code. It's a bytecode. It's a virtual machine that looks very much like x86. It's actually a subset of x86. And we can convert it to native machine code on the fly inside the client, inside the chain. So commercializing that and getting that out, that's maybe like, we're at the tail end of that. There's maybe like 1 month of that left. But the next step after that, and I don't know if we can accomplish this by the end of the year, is to take that bytecode and then run it on GPUs, which would give us 20x more compute. And if we're doing that, it means that we've optimized the hell out of everything else, and now that's important enough to do. And that's basically, it means that like, I think the amount of bandwidth that we can consume is now, like, we're measuring it above 1 gigabit. It's like 1 to 20 gigabits worth of incoming packets that are being swarmed into this thing. And maybe it's a rack of GPUs, it doesn't matter. But like at that stage, like this is kind of a financial switch. You can almost call it like it's almost like as if Cisco built it, and here's like a really boring thing. You like card it into like your bank, and you plug in a bunch of stuff into it, and it, you know, makes markets happen. Like that's like the engineering path there. Obviously, like the hard part is always, does anybody care? Can people buy? Even if this is super fast and cheap, is anyone going to use it? And like, how do you find those products where this stuff actually makes a difference and like can go get product market fit? That's always the hard problem in any of this stuff. I think the tech is, you know, there's enough smart people out there that can figure it out.
Cool. I mean, I'm certainly super excited for that, and yeah, I think like right now, Solana, it's certainly fast enough to run like one big app, but I think, you know, getting another factor of 20 or so will have it, you know, it'll be able to run, you know, sort of more of an industrial scale ecosystem, as opposed to sort of like mini scale ecosystem or industrial scale app, and get it to the million, you know, marker. So which I think is like ballpark where things need to get to be, you know, for that not to be sort of the proximate or at least the looming limiting factor. Yeah, and you know, Andre, what's your thought on like, you know, the future of the you know, Yearn ecosystem, and you know, I mean, sort of like future spelled out 3 months is maybe sort of like straightforward in some sense. I don't know if it is, but like, I could certainly predict maybe what, like, you know, sort of approximate improvements would be or additions. But like, how about like 3 to 5 years out? Like, what would really excite you about it? What you know, what would be like a real win state?
Well, like it's definitely a different value proposition depending on which specific product vertical you're talking about. So starting the conversation sort of just on Yearn itself, an analogy I like to use is consider a river and consider flowing water. Now consider there's a bunch of different rocks in this river, and how the water flows changes its pathway based on what rock it hits and how it moves. So you've got this water that's constantly streaming past, and it's streaming sort of, water has a way to find its most optimum route based on the obstacles you put in its path. And I would like Yearn to be that for capital. You know, so the capital can just stream in from one situation, and it's going to find the most optimum path for that capital based on the obstacles that are presented in its way. So I mean, I never envisioned it to be a client-facing solution. It's really meant to be a protocol-level solution, in that, you know, its job is consolidate all the capital and then deploy that where it creates the most necessary value. Now the reason I like that description specifically is because it's agnostic to the protocols it feeds, it's agnostic to the chain it feeds, it's agnostic to absolutely everything. It is just the storage warehouse of capital where it then flows to. So I'd say that's probably, like, if we're starting to talk 2 to 3 years from now, you know, it's your I hope, talking about situations that aren't just, you know, financial instruments. And I think we're sort of starting to see that. It's bridging out slowly. For example, what you guys are doing with maps.me as well. So you know, there's more things you can do. And when I say capital, that's also got a financial value towards it. What I should probably say is digital assets, which is more accurate description, because that isn't necessarily something you deploy for financial reasons. So that sort of deployment situation is definitely what I would like to see in the future, and I'd like it to be agnostic of where it goes or even what it is pooling. Its job is just to find the route of least resistance.
Yeah, that totally makes sense. And so thinking of it as sort of like a switching board almost, you know, in the middle. And then I guess there's a ton of flexibility and you know, see where it goes in terms of what happens at the other end, and you know, adapt to support that. How much do you see it like long term being on-chain automated investment strategy type things versus like you know, having sort of manually designed investment strategies with sort of manual iteration?
I think you'll kind of have sort of both. I mean, if you look at something like Set Protocol, right, they're already walking that way, where it's very manual designed strategies. I mean, for now, you play within the rules that the Set Protocol has integrated with and allows you to play in. But like those are traders or money managers or just enthusiasts that set up their own manual rules and strategies and stuff. And I think the beauty there is that there's a lot of strength because there's only so much data you can use from on-chain information that it lacks a certain nuance. It lacks a certain like social inflector. Like it can't respond on potential external rumors or any of that stuff. And like that's where that more traditional manual management comes in. Now, especially again, while we're talking about like yield markets and financial markets, and especially when you talk about speculation, there's a very large part of that is sort of social contract based, and it's not on-chain information. It's what people perceive is going to happen with something that most often becomes the reality thereof. So I definitely think it will move to more manual strategies, but on-chain codified. Because I think that on-chain codified part is what gives people comfort. Like it's really scary transferring money into someone else's bank account because you have no idea if you get to see that again. But like it's almost less scary to do that into a smart contract if you've read that and understood it and there's social consensus on what that smart contract does, because you know the exact rules under which you can gain it back or anything that might happen with it. So I think the real power is a combination of both. I mean, it's the same what we're seeing nowadays. Like it's not just like if there was a magic formula you could apply to the financial markets to make the most upside, it would have been invented, but it just doesn't exist. There's always that human component that has to play part of it. So I think the on-chain possibility is limited in terms of what it can maximize, and then after that you need to start adding that human component. But I don't think it's either or. I think the two live very mutualistically together to create something that gives more comfort, that gives more transparency, and at the same time allows that external stimuli to still have input into sort of perfecting these strategies.
Yeah, it makes a ton of sense. Sort of matches a lot of what I sort of felt like, trading in traditional finance, that, there's a lot you can get from sort of combining together automated systems with the things that those automated systems definitely aren't going to get right. Yeah, what's your guys' sense of like what the biggest, what are the biggest like medium to long term risks for DeFi? Like if you had to tell a story where it didn't ever get big, what story would you tell, and what would be like contributing factors or ways to avoid it?
It's a good way to frame the question, Sam. It goes off of Andre's point, which I think is really interesting. How much can be like you have this limited amount of information that can be on chain, and then all of these other human things have to happen off chain. And something that I think could be a terrible story of really DeFi gone wrong is the human element and the human component. So like not enough care and attention focused on humans, that there's this distrust that all of the incentives are just short term and there's no motivation, there's no connection to the human. And so people end up going other places that have a lot more personality inside of them. And while I don't think that's true right now because crypto has a ton of personality in it, I do think there is a world where that personality doesn't actually connect to every individual in squad senses or in a sense where people feel empowered. And that's probably the story I would tell, or the one that I think about most. So
I just want to jump in there because I want to affirm how important what Kristen just said was, because when Sam phrased that question for me, I immediately went to 100% technical components. I was like, well, EVM failure, maybe consensus failure, maybe some of the big miners that get blocked out, geofencing, these kinds of things. Like like as someone that lives inside of smart contracts, I did not consider the human element for 1 second. So I think what Kristen just said is probably more important than any technical fault that I could point out, because if it's just people like me building, the humans are very soon going to start moving away. That's an excellent point that I wouldn't even have considered. So thank you for pointing that out.
You know, there's a surprising amount of good actors in this space, considering this whole space is based on trustlessness. I think it almost, by definition, attracts people that are generally good. And, you know, there's a bunch of stuff that kind of makes crypto Twitter news, like the bad things that happen. But in my experience, it seems like the vast majority of the things, when they go wrong, the people do the right thing and try to help each other out. Which is kind of cool. I think we have really good starting conditions.
Yeah, the humans are by their nature good, right? Like humans will always make the best available choice on their menu. What's really interesting about how organizations have evolved. So I got deep on this problem over the last 2 years or so, and the humans have organized and evolved over time in these sort of big stages. There are 4 stages, and the newest one being teal. And a lot of organizations operate from this orange stage, where the metaphor is a machine. The goal is to beat competition, to achieve profit and growth at all costs, which actually comes from a place of distrusting humans. So even though individuals like in interconnection are going to be good actors, actually at an organizational level, we've trained people to distrust and mistrust each other. And then you sort of get what's in vogue right now in organizations with green organizations, where the metaphor is a family. And that's good. It focuses on culture and empowerment, but there's one that's further to that, which is a lot more in line with how crypto is. It's viewed as living entities that are organizing towards their full potential. So as I think about DAOs getting created, if that mindset isn't there, if the mindset of a DAO is we can't trust anyone else because none of our organizations in the past have ever done that, I think we're going to have a lot of problems.
Like thinking about it not working right is I don't know why, but I keep being drawn back to like early internet days. Because like one of the first things I want to say is something like a problem right now, high gas. Everyone's talking about it. Everyone's complaining about it. If one more person mentions it, I'm going to block them on Twitter. But if we go back, you know, to the early days of the internet, like the first ISDN lines were ridiculously expensive and they were ridiculously slow, and you know, like that was your high gas fees. And like over time, that gets faster and that gets more efficient. I don't know. Like I'm very pessimistic about what's happening in this space. I struggle with the statement humans are good. The amount of sheer scams and frauds and people I see on a daily basis coming into the space claiming they've solved stuff that, you know, the rest of us have been trying to solve for the last 5 to 10 years, and they just miraculously now know everything. But before they tell you how it's going to work, they're just quickly going to do a token sale. You know, that kind of stuff just rubbed me the wrong way. So I'm like very antagonistic and pessimistic about that. But I'm struggling to see a disaster level or apocalypse level event that makes this not work. Like every comparison I see with it is you know, early internet days, early communities organizing. Like it's very much the vibes of, you know, old like IRC channels and bulletin boards and stuff, and like people coming together that never before were able to communicate or do these things, and like organizing themselves in a whole new way, if not a new financial paradigm. So I think, Sam, you might have found the only area I'm actually optimistic about, and that is that I struggle to see this not surviving.
Interesting.
I agree. The anti-fragility is in the space is high. And you've seen this even like, I don't know, there's so many people that like to shit on Maker. Like during the double Black Swan event, it seemed like everything was going to like blow up. But my initial reaction was like, oh wow, this like rickety DeFi project built with like this weird language survive the biggest financial meltdown in the world, there's probably something there, right? Most definitely something there, right? Like, and I think you've seen them like kind of come out of it and rebound, and like despite still all the risks and stuff, I think like the fact that the space has gone through so many like ups and downs, and like it shakes a ton of the bad ideas out and a ton of the weaker teams out as well.
Yeah, and I mean that's also a lot like that's the good and the bad that I also like to tell people often is, you know, because of the sheer transparent nature of the space, when something goes wrong, it's a lot more public. It's a lot more, everyone knows about it, everyone hears about it, everyone talks about it. You know, when things go wrong in traditional markets or traditional organizations or closed corporations, it still goes wrong. It's just behind closed doors. You just don't hear about it. So like it's very often easy to think things happening here are so much worse than they actually are, and that's just because we're all aware of what's happening. But like every time something bad has happened, I've seen people, you know, get back up and be stronger than before that event occurred. And like those are such invaluable lessons learned, because like thanks to the nature of the space, you know, I've been able to learn from mistakes that other teams have made and like see how they respond and how I should have done it differently. But, you know, coming from a traditional finance background, I can promise you when stuff used to go wrong at the bank or the insurance or whatever, no one knew about that stuff. And we just figured out ways to brush it underneath the carpet as quickly as possible. So like every potential failure I can think of is something that ends up making the space stronger. As long as I guess people see value here and keep building, but just unless it's like pure mass hysteria and everyone is sharing the same delusion, you know, there's definitely something here, and like there's definitely more coming. Because you know, I mean, most of the people that are even on this call or that I talk to on a daily basis have been here since, you know, pre-2017, pre-2018 bear markets and stuff. Now, like if you could survive that and you're still here, like, you know, what's going to be the thing that chases you away if through all of that negativity and depression and everything else you still decided, no, this is where I want to be. Damn, I'm gonna have to think more on this, but yeah, okay, thank you, Sam. I think you turned me into an optimist.
Not what I intended. I don't know.
Sam, I've got a question for you, if that's all right.
Yeah, go for it.
And I love that explanation, Andre, around just how visible and how transparent everything is in this space, and so therefore how much more we feel it as consumers on the other end. Sam, my question for you is that, and really it's for everyone or anyone who's interested in answering, but in the last cycle, Ethereum really seemed to be used as this financing machine, right? But in this cycle, it's more about financial services. And Anatoly mentioned that finding product market fit is hard, right? The tech can be easy, simple, anyone can do that. Maybe not simple, probably not easy, but you know, there are lots of people out there. So my curiosity is, what is the next product market fit, like really zooming way out of this cycle? We're still figuring out where consumers are here and how big will be what consumers stick around for. But you mentioned a Turing complete network and Ethereum. So we're obviously getting bigger than financial services, but what's the next one? What's looking like it might be on the horizon?
Yeah, so I think what I would say is probably two things. The first is mass user apps. We haven't seen DeFi get into that, largely because of gas costs, among other things. But that's where a huge amount of the upside is. And there are real tech problems there, as well as marketing and adoption ones. I think the other side of this is that, you know, it doesn't all have to be finance. You can decentralize things other than finance. You can decentralize social networks. You could have on-chain Twitter. You could have on-chain encrypted messaging, you know, and I think that's something which is technologically not that difficult, and I think could be super cool, and something that you know, some people have started to work on, but there hasn't been a ton there. So you know, I would guess we'll see more of that over the next, you know, year or two as well.
Well, and also to feed onto that, like I've always had this this ideology / vision that, you know, like 5-10 years, whatever it is in the future, people aren't going to be talking about the blockchain. You know, just like nowadays you don't talk about your fiber line or your ASDL line or any of that stuff. You don't know it's sitting on in what, you know, switch is this stuff operating on. But you know, 40 years ago we did know that stuff, and we were aware of that because you had to be to build this stuff. So, you know, where I hope ending up in a position where the apps you use, the things you use, you don't even realize they're running on chain. On chain just facilitates that it's open, trustless, permissionless, and one thing we haven't even tapped into yet is like the real decentralized nature of blockchains. You know, when you can start having a light client on a phone that can just directly connect on chain without needing to go through some kind of centralized API and stuff, you start cutting out that middle layer communication. That's already big as well, and a bunch of advancements there. The encryption technology itself, obviously fantastic, that in itself can be leveraged as a tool. So like there's everything you see today that exists on the internet can exist on chain. It's just like, but at the same time, everything you see today on the internet couldn't exist 40 years ago on the internet. It just wasn't possible. You didn't have the scale, the technology, everything else you have. So I think one thing I struggle with a lot when I talk to people in any kind of public forum is, you know, there's this expectation of everything has to be ready, everything has to be done. We're already supposed to be at adoption and all of this stuff. And like I keep telling people, you know, like we're still building these things. And like I know a price goes up really quickly and it goes down really fast, but technology doesn't build out this at the same speed. So, you know, there's this constant sort of tension in terms of how long things take versus how long the people funding these things expect them to take. But I definitely think the end result is, you know, a decentralized internet.
I'm more pessimistic. It's funny. Usually I'm very. I think like the really hard part here is that the advantage of these things are to like consumers are like really small. Like you don't notice your ATM fee. You don't notice your like $10 a month bank account charge. You don't notice the attention that like an advertisement grabs from you. And if you like could replace all of that stuff at once, you would probably tell the difference then. Like maybe you'd have like a day like, whoa, something's different, right? But you might not even be able to put your finger on it. It's really tough to like to make that be the thing that attracts users. So like kind of my best hope for this is that like there's idealistic founders that like believe that that is more important than anything else, and then that's the constraint they're working with, and they try to find products. And it's possible they probably could have succeeded without those constraints, but they keep trying until they actually find something, and then it blows up. So like this is where like I think like it's just a much harder problem than it seems, and it's going to take a lot of effort.
So maybe to add some qualifications and to see if I can change your pessimism a little bit. You know, like the reason blockchain in its current iteration is a financial instrument is it evolved out of a need. There was a necessity. We had the financial crises. People weren't in control of their funds. They couldn't be in control of their funds, and this, while not necessarily built for it, even though, you know, sort of it was, it facilitated people to be able to fix the problems they saw in that area. So that's why it's very financial focused currently. But like, if you look at the current landscape and the current like social economic markets and all of these things, people are becoming more and more aware of their privacy and what's being done with their information. So, you know, that's already sort of another cataclysmic event that if it breaks, and it's going to break, will again cause people to sort of migrate to this side where they're in control of their data, they're in control of their privacy and all of these different things. So while I agree with you, like the barrier to entry and the friction right now is so small that people aren't going to shift. But I think that, you know, when you talk about privacy, you talk about dataship ownership, you talk about accessibility. I think these things with censorship, the way it's happening is primed to sort of collapse in a similar like 2008 finance apocalypse level event. And when that happens, it causes that shift in mentality.
Yeah, and oh, this is the end. I've got such a good question for Sam to finish us, but go ahead, Mariano.
No. If you have a final question, please go for it.
Well, it's on the Andre side of optimism here for Toly, which is around further than just a decentralized internet, wondering if we'll start to have decentralized organizations of people. So as people start to organize, they realize the importance of organizing in a decentralized manner, and that is a potential use case that the consumers will and do care about. And what it brings up in my mind is everything we've seen with Wall Street Bets. And I was curious, Sam's narrative around Wall Street Bets, kind of what is the synopsis story he tells and how he sees about future interactions with blockchain.
Yeah, I mean, it's like blockchain is the obvious outlet for, you know, a lot of what we're seeing. And I think it shocked literally no one in the world when, when Robinhood banned buying of GameStop. People put their money into Dogecoin instead. It was sort of the obvious financial transition. And who knows what happens? Like, probably things calm down, but I don't know, you can certainly tell a narrative here where the floodgates are starting to crack open, and there's the Overton window has shifted quite a bit on this in the last month even, and would you be shocked now if like a few members of the House of Representatives on the floor said, like, in an angry rant against Robinhood, like, crypto fixes this? Like, I wouldn't at this point. I would have been shocked 2 months ago, but at this point, I'm sort of like no chance they're not reading people's shit posted about Dogecoin. And I mean, it's amazing how quickly and unpredictably some things can shift. And I mean, yeah, I don't know what'll happen, but it's it wouldn't shock me if there's significant inflows in crypto from that.
Well, this was extremely interesting. I want to thank the four of you for participating in this panel. For me, it was the Sam made Andre an optimist panel, so I'm glad I didn't miss it. Thank you, Anatoly, Kristen, Andre, Sam, for being here.